And good morning, I think. 8 o'clock, 27 February 2025. My. So quite an interesting evening with the NVIDIA earnings. I'll get to that in a minute. This is my private virtual journal, trading journal, is the purpose of this stream. The idea is that it provides accountability, transparency, and I'm able to review it on any kind of device. That's why I stream it up to YouTube. And also, it captures the audio bookmap very, very accurately and precisely captures all the trade stuff and everything within that application, but no audio. So the purpose of the audio is to understand what I was thinking at the time that trades or whatever, happen. So this is not for any kind of financial advice. There is a disclaimer in the description here. This is, again, my virtual private trading journal, which I share for the reasons I just described. Also, it's important to note that there's a delay to YouTube. So if you were listening and thought that it was a good idea when I discussed a trade, it would be some seconds late, which wouldn't be very good, probably. All of the times that are visible on my screen and that I refer to during the day are Central Standard Time. Past performance is not indicative of future results. That's probably one of the most important statements anybody makes, and most traders completely blow it off. It's just legal boilerplate. But it is true, because trading is a business of statistics and probabilities. And no matter how large a historical data set you have, the outcome of this is a statistical fact. The outcome of the very next trade is 50-50. Nothing in the past affects that probability. All right, so let's go to the numbers. We have a couple of 3 numbers out this morning. And I never have the damn screen open. So at 7:30, we had durable goods and GDP. We have Fed Chair Barr, Vice Chair Barr, speaking at 9, and pending home sales at 9. Those are both 2-star events. Oh, Jesus. And we got another Bowman, and then we got Hawker. We got the Fed balance sheet at 15:30. So it's we're talking Fed kind of day. This morning, already out of the way, are continuing jobless claims, durable good orders, core PCE, GDP. Those are all out at 7:30, and that's what you see going on right here. I would guess that they aren't too good, just looking at the chart. Anyway. So that's the reports and the numbers and earnings. There's Dell and HP report today. Certainly nothing like last night with, and they report after hours, by the way. Certainly nothing like last night with NVIDIA, which was a huge market mover in a couple of different directions. Okay, on to the pre-market then. This is my bookmap execution platform, and this is my IRT charting stuff. They're both in front of me, obviously, at all times. This is a 4-monitor rack in front of me, and then a couple more at another desk, 2 stand-up desks here in an L, and off to my left is a couple others, but I can't share both of these monitors at the same time on the screen because these are 32-inch 4Ks, and you can't see anything. It's become so small that on any kind of a device, it's just useless. So I do one screen at a time, this one and then that one. It's, I might play with that just to do a test and see, because it would obviously be pretty cool to have both of them live at all times, but because that's the way they are for me standing here. Anyway, this is the ES Renko chart of the March contract, and currently we're in the full session. This is the NQ. This is the ES Micro Composite, which is the RTH session daily bars. And wherever price overlaps, like here, I draw a volume profile around them, and that, in so doing, generates a micro composite VPOC and produces these high and low. I'm able to push these, these high and low volume nodes, which are the red and green lines here, to bookmap directly, automatically. And these reflect the high and low volume areas in the volume profile of the micro composite. And this is the market profile for the ES. So there's NQ and the rest are ES. Also push to bookmap are the session prices. Now, back to bookmap. So here's the MC or the micro composite column where I manually enter these different levels. Gap high, gap low, previous POCs, the current POC, micro composite POC. My workflow is that current is text is red or highlighted, and stale is text is converted to black. These are the high and low volume nodes pushed from that micro composite to bookmap. This is the full session volume profile, which started plotting at 1700 last night and continues through 1600 this evening. This is not the ETH, this is the full session or the Globex. This is the RTH volume profile, which will reset this morning at 8:30. Chart volume profile just plots what you see over here on the left, on the screen, or the chart, whatever you want to call it. And this is pretty important column. This is my notes, where I first change the title of the column every day to the current open type. And then I flag, and then I enter the statistics associated with the various price levels based on the open type. And I also enter flags for the migrating VPOC and stuff like that. So the open type, how you determine the open type is real simple. It's the relationship of where we are going to open today's RTH session as it compares to the previous RTH session close and the previous RTH session range. So we are going to open higher in range. I just happen to have that from yesterday. So that is the open type. Higher than the close and within range. It's real easy, straightforward. These are the price levels pushed directly from bookmap, and I think they ought to be pretty self-explanatory. There is a POC for both the full session, which is kind of a dark yellow, and one for the RTH session, which is a brighter yellow. There's the IB high and low, which are nothing miraculous. They're just the high and low of the first 1 hour of the RTH session. And the rest of then there's a VWAP for both RTH and Globex, and a mid for the RTH session. Now, POCs are a lot of talk about that, and they are absolutely nothing mystical or mysterious. It is just the mark. It just marks the price at which the most contracts have traded so far in the session. That's all there is to it. 3,097 was where we traded at 93.5. And when somebody up here, when this one up here says 3,098, this yellow line is going to move up there. That's it. It just marks the price, the current active price where the most contracts have traded at that moment in that session. That's all. This is the heat map, which just reflects by these gradations in color here. I do this grayscale because you can do a real obnoxious, in my opinion. I don't like all the colors, so I do it like that. This marks liquidity levels laying in the book, when they came in and when they went out. And of course, everybody that's been associated with trading for more than 5 minutes realizes that the book is just fantasy, but it's better than nothing. So there's that. Now let's look at those statistics and see what that is all about. The way those work is, this is my statistics study in IRT. IRT highlights the open type after the RTH session opens. And coincidentally, this is from yesterday, right? Yesterday, we also opened higher in range. Very simple, this statistics thing. It looks back at 2005 days. Of those 2005 days, we opened higher in range 603 days, which is 30.1%. Of these 603 days where we opened higher in range, price revisited the overnight point of control 504 times for 83.6% of the time. Jump back over here. Get up here to what happened here. I don't know what's going on. There they are. Okay. So it's 83.4. I'm sorry, 0.6. And that's all there is to it. Bam. That's it. That's all there is to putting those levels in there, based on the open type with the price they are associated with. Typically, the second highest probability is the overnight mid, which is 77.6% of the time. Overnight high and low usually come along there. Overnight high is 75.5, so that's up here a ways. Overnight high, 75.5. And so it goes. And then overnight low, it'll be down the way here someplace. That's 51.2% of the time. Then after these statistics, generally comes the previous close, RTH high, RTH low, etc. Previous close is 71.1. Previous high is 55.1. And that's it. That's how she works. So that's the statistics. I've talked about pretty much everything else. Now, it's important to be able to trade, right? And that works like this. I use multi-bracket. So, oops, wrong button. So I have to tick on the multi-brackets. And in this case, I'm using a 4-lot risk-neutral package here. And this risk-neutral package is real simple. It's easier to explain with a 2-lot probably. They have to be even numbers. The stops for both contracts is at one level. In my case, I choose 12 ticks. Then the first take profit target, which means the trade is then risk neutral, is at the equal number of ticks in the positive as the stop is negative, and for half of the contracts. And then the rest of the contracts can be divided up however you want to with a runner. So let's look at the 4 lot. 4 contracts, all 4 contracts, same stop. Half the package of contracts at the same positive ticks as the stop. Then the other 2 are divided up. And the way that works is the minute you ever achieve the minute you have achieved this first scale, the trade is risk neutral, and the worst that you can do is scratch. So there's that. Then in Bookmap, no matter whether you use multi-brackets or not, if you want to trade, you've got to click this padlock here and select how you want to interact with the application. Chart, meaning you can only enter trades or move things around, move levels, or move targets with the mouse in the active data column here. The dome, which means you can only manipulate stops and targets or enter resting orders in the dome columns, or obviously both means you can do both, right? I initiate trades with my keyboard, and so I choose to only manipulate them, stops, targets, etc., on the dome, because I have proven to myself that I have accidentally clicked over here during the day and suddenly was in a trade I didn't plan on. So to reduce the probability of an unforced error, I only manipulate my existing stuff with the dome. Chances of me making a mistake clicking over here is pretty simple. They're pretty low, I believe. Then I've confirmed that it's the right number of contracts for the package size. And you notice that if you click this again, it stays green because you selected a type of interaction. The padlock stays open, means you can trade, but you get the real estate back and you don't trade your P&L. Okay, so that's that. Some other aspects to my trade management and trade management system, stuff like that I will get into in a little bit. I'm trying to follow a process and an ordered process for this every morning, this pre-market stuff for myself and anybody that happens to listen. But, remember the thrust here is that it is my private virtual journal. So that's the way it works. And I will do something here. I will get ready for that snap. I think I'm doing pretty well here. Yesterday was not yesterday, but yesterday evening after that Nvidia number was pretty rambunctious. You can see where we closed over here. Here was our close. Traded down and then way up here, and now we're back over here again. So that's that. Okay, so I've got the stream open on the other computer there to be able to monitor that outside of OBS, and we'll see if it sounds right. Stream seems to be flowing merrily down the hill, so I think so. Yeah, so that's okay. All right, we are at 8:20 now. And what I do every day at 8:20, every day at, what's going on here? First, what I do every day at 6 o'clock is post the reports. And then at 8:20, I post a bunch of numbers to a Discord site that I am a member of. Try to help out a little bit, or contribute something. And I can't do two things at once, so it's hard for me to, That's the reason for the stream, actually, is to try to avoid, for me to focus on trading and, be screen snapping and typing in a journal and all that is next to impossible. So what I do here for the TLab, which is a Bookmap Discord chat room called the Traders Lab, started by a guy and maintained currently by a guy named Tom B., who is a professional trader. With 45, going on 46 years experience, very successful. Obviously, it's his sole source of income and has been for 45 years, I guess. So I guess you'd call him a professional. A couple of things that resonated with me and why I stuck around there. The crowd is pretty good. There's there's obviously a few yahoos in there, but most of the people are serious about getting better at trading and are serious, running a serious trading business of their own. So it's not like romper room. Absolutely nothing is for sale, nor are you solicited for anything, even to subscribe to Bookmap, which is pretty phenomenal. It's their marketing tool, but they never solicit anyone to try to, they certainly want you to see how great it is and then subscribe, but you're never solicited. There's no, join, buy my indicator, do any of this crap, which is pretty phenomenal. And Tom's has a similar outlook to trading as a business of statistics and risk management and that kind of thing. So that's the reason I kind of stuck around in there and have tried to contribute a little, as I said, every day. 6 in the morning, I post the numbers and reported the numbers. And then at 8:20 every day, I post all of the reports, I should say, at 6. And then I post a screen snap of all these numbers and relative, to give people that don't have all different kind of charting or whatever else, some data if it's helpful to them. So that's that. And now it's 8:24. We're going to open in 6 minutes. See how we're migrating here. So the POC, what's going on here? The POC is moving around a little bit. The mid looks like it needs to come down to skosh. Up tad. Obviously, these numbers like the POC and the mid and stuff, they are fluid and dynamic right up until the open. So, not a surprise. And it's important to remember that these are just statistics. This is a percentage of time in this open type that price revisited these levels looking back over 2005 days, period. Has nothing to predict, has no predictive powers about what's going to happen today. That's a fallacy. about back testing and everything. It's very valuable. I'm not saying don't do it. And that's how you vet a setup that you can forward test. But the fallacy that, we've had, in roulette, we've had 10 reds in a row, so the probability that we're going to get a black is huge. Well, no, it's not. It's 50-50 or whatever the percentage is. It's actually less than 50-50 because of the zero. And in America, the double zeros, the greens, that actually lowers the percentage down for the gambler and raises the edge for the house. And that's called the gambler's fallacy. When you think that, because of this many, it is, the market is random. Games of chance are random. That's why they call it games of chance. Is random. And in a random environment, you can have a random distribution of one or the other. You flip a coin 1,000 times, you might get 50 heads in a row. It's still, everybody knows that the outcome or the probability of a coin flip over a long enough sample size is 50-50. I mean, if you don't know that, you need to go figure it out. Do some back testing or some studying or, read some other stuff, because that is the truly trading as a business. That is the key. And you better plan on random distribution of outcomes. You may have better, there could be a whole string of losers in a row and a whole string of winners. That's perfectly normal. I mean, that's a fact of statistics. So here we go, ladies and gentlemen. What are we going to do now? The stream is streaming. That's good. I got to figure out if there's a way I can eliminate the delay. I hear a guy talking about, well, I've done something, so it's real time, there's no delay or something on YouTube. I don't know. I've looked around on the YouTube, whatever you call it, the dashboard or whatever for a YouTube channel, and I don't see that, but I haven't gone so far as to Google it, which I will do. Oh, another part of this, back to the stream itself here, as my virtual trading journal, I also have a commitment not to take any trades on this account off the stream. That's pretty important to know. And that's why the stream lasts so long. It's all day, because when I first started early on, I would, for a couple hours, I'd shut it off and go do what I had to do or something and come back in. And then there would be an opportunity and I was going to hit into a trade and I had to stop and not do that because the stream was not up. Well, that's pretty stupid. So I just leave it up all day. And it's been a long time now that it's up all day. I realize that it's not, nobody's going to sit around for 7 hours and look at or listen to it, but nor do I. When there are trades, every day, throughout the day, I create a catalog or a list of all the timestamps. I have a program that's in OBS or an add-on to OBS, and I can just do a hotkey, and it does, like, for example, the 2-lot package and pre-market levels and, different titles that I've pre-made. And every evening when I set the thing to unlisted, I put those chapter markers in so that they're available. Now, typically, I've been setting it to private, or now I've learned that unlisted is the way to go. If there's no trades, if there's a trade, then I very definitely leave them live. And here's our open. And there's a screen snap that says, and there's a chapter marker that says market open right there. Okay, so my first migrating VPOC is right there. And why do I do that? Yes, the yellow brick road continues to plot all day, but pretty soon it's going to be scrolled off the left of the screen. So my objective is to have any data that I think is important for a trade right here in front of me on the hard right edge, without having to scroll in and out and up and down and backwards and forwards and a bunch of stuff. And look how this moved down here. And I didn't pick that up because I was busy talking about something. I don't know what. So there we have our right before the open. We jumped down there, but not got close to the close. So this would have changed to lower in range, but fortunately it did not. So that's pretty cool. Here's the next one. Remember, the IB high and IB low are just the high and low of this, the first hour of this RTH trading session. That's it. IB is an old market profile acronym for initial balance. Good. According to and so there you have here's the volume profile for the RTH session. This is the full session. So this will continue to plot, as you can see right here. And I have not figured out a way to do that. Otherwise I could, I guess, have it just ETH and RTH, but it's so easy for me to go down a rabbit hole about trying to code or figure out something. And it's just like back testing. I think it's very important to back test and properly vet whether a setup and criteria have an edge, a defined statistical edge or not, or expectancy or not. And then I end up down some rabbit hole trying to teach myself Python or Quant Connect or something else and spend hours and hours doing that when the goal is to just vet a trade, vet a setup. So I have to be real careful of that for myself. And I don't know if that's a unique thing or what. But it's a personality flaw, I guess you could say. So we're off like a herd of turtles here. Now I'm going to change the chart setup to RTH session only in IRT. So now we're not looking at the overnight anymore. Just this is yesterday's RTH session, and here we are today. Okay. And there's a reason for doing that. And I will point out what that reason is in a minute. Come on, why are you not saving? There you go. The difference here between value area low and developing value area low or high, is that developing refers to the current auctioning session. Without the D, just value area high or low, is the previous session. Now, when I'm on full session, these would refer to, now that the RTH session is open, these would then refer to the overnight session. And I don't want that to be the case. So when I change the package to, that chart to RTH only, these are correctly identified. And they're correctly placed. So you see here that this is the value area high. What is that? 7.5, right? And we come over here to 7.5. Oh, looky there. And this is the RTH session, and this is the current RTH session. So I love it when a plan works out, right? And this is after the big hootenanny last night. I couldn't tell you whether, there was, inventory was basically long, so you could look for some sort of a responsive selling to take profit. There's no numbers out this morning at 9. I'm going to just be real cautious here, as I am every day, but I've got to get over this and start taking some trades. I'm thinking about dropping back to a 2-lot, or even going down to the micros and just slap them on, you know. I've got to get over this paralysis by analysis. It's based in some outside stimulus, which is essentially the tilt. Got me on tilt to a bit, to some extreme or some degree. And I have a real thing about not trading on tilt. I think that's really terrible. If you haven't had any sleep, you lost your girlfriend, whatever the hell it is, or your wife or something, or anything happens to you that puts you on an emotional or a physiological tilt, you know, if you're tired or sick or something like that, you're not on your game and you're not focused. And this is a really high performance sport. And the best minds, some of the best minds in the deepest pockets and the most high-tech computer gear in the world are 100% focused on taking your money. It's important to realize here, and this might be a good time to say that, actually. Futures is a zero-sum game, or business, or environment. What does that mean? Well, in stock or equities, you know, NVIDIA, you have a pool of shares that are created when they IPO. It's the net worth of the company divided by whatever number of shares are going to float. And you can buy those shares to trade from that pool. Crypto, you're an idiot. God, no. It's just a bucket shop. As is, and I do have background information or background knowledge of Forex, and I know for a fact that that's the most rigged bucket shop game going. But so there's only equities and there's only futures as far as I'm concerned. Futures is a zero-sum game. If you know, and I'm sure you do, they don't call it a futures share or stock. They call it a futures contract. That is because it is a contract between a buyer and a seller, i.e., it's zero sum. For every person that has a win, someone has loss. The other side of that contract had a loss. Now, it's anonymous because it's numbers, right? But that's how it goes. If I were to go long right now, somebody went short. There's no other counterparty. There is other traders. And that has deep impact on the market if you stop and give that some thought. You know, if somebody, I don't want to screw up the, let's look over here. Here is, look at this micro composite here. This is the reason exactly that the old, well understood axiom about trading is the market goes down to go up. It goes up to go down. And why does that happen? Well, while all of these people are getting along here, somebody has taken the other side of every one of those trades up here. Somebody's taken the other side of all these long trades. And how are they going to get paid? Well, they're going to sell the thing. They're going to buy it back or sell it for a lower price. It's just so simple. It's not any kind of complicated, economics or anything else. It's like, okay, how can this work? Well, that's how it works. And my belief is, or my, understanding here is that right? I don't think so. 16. No, it's not right. My understanding is that it's typically the higher time frame that's the other side of those trades. Because, and I say that because who has the money? Do you? Do I? Certainly not. I don't have them. I wish we had a bigger day, but we can just look at it even here. All these guys are buying all this way up and everybody's just over the moon. Somebody is selling to every one of those people. And how is that person going to get money? They're going to do this with price. I don't have the money to absorb all of this and sell to all these guys. And I don't have the horsepower to make the market move down. But somebody does. And that is what I believe how the market works. Purely speculation. Much higher time frame. People are focused on value of the S&P, but ask yourself the question, do you give a shit what the value of the S&P is right now, or do you care that if I shorted it right here, it's going to go down here, or oh my God, I shorted it here and it went up here? That's what you care about. Could care less if this says 59.98, 49.98, 10,098. Doesn't matter to you. What matters to us as traders, investors, different story, but what matters to us as traders is the current fluctuation in price. And most of the movement, they say, and I believe them, in these intraday swings like we're looking at here, these are just 5 minutes, right? These are only 5-minute periods. It's pretty much noise. And so what happened here? Well, we're selling off. I guess we're taking back some of that irrational exuberance that happened last night over NVIDIA, I guess. I was listening to Linda Bradford-Raschke the other day over the weekend or something. And just, flipping through YouTube to go to sleep, and I try to always focus on something to do with trading rather than just random stupidness. So this was an interview or a webinar of hers from, I think, clear back in Big Mike. So it's got to be years ago, before it was even Futures IO. Anyway, it doesn't matter. She's talking about that she really pays attention to the first 5-minute candle, which would be here. And she looks at the high or low of that 5-minute candle, and typically, whichever way that's taken out, the market tends to go that direction. Well, I've been looking at that since I heard that, just out of curiosity. So this is essentially the first 5-minute candle. There's the low, and there's the high. Well, we took it out right here for 8 handles. But now look what happened to the low. And another one is the VPOC migrations as a structured trade. This looks like we're going to come down and test down here. So, I'm not saying these are just interesting things that I've been looking at. Another one that I heard about the other day is Hogue over on TopStep. I think he's a pretty good guy. He's a floor trader, so there, those locals were crooked as a dog's hind leg, most of them, because it was a rigged game. I mean, they could see paper coming into the floor and they'd front run it. Well, that's completely illegal. Would be completely illegal now. But I think it still goes on to some degree with high frequency traders. Anyway. He automatically takes on this TopStep TV thing. That's another, scroll and hit on the weekend or going to sleep. They take an opening swing trade based on 1 minute opening swing. Basically, they put a a resting order below and a resting order above the opening swing, the amount of contracts or the size of the order is based on the the range of in ticks, and the risk associated by that or generated by that, whatever you want to call it, developed by that. And then whichever one gets hit, they turn around and put a stop a few ticks on the other side of that range and see what happens. According to him, and here we go with people, everybody knows it's a game of probabilities. According to them, it's a low probability trade, but if you hit it into on a range or a trending day, no, I'm sorry, not range, but trending day, it can be a phenomenal trade because you're essentially on the right side of the market from the open, from the first minute, So I haven't vetted it. I'm not making any recommendations, just interesting. You can go to TopStep TV, whatever that thing's called, they do it in the mornings early and hear all about it. He puts one on crude at 8:30 or 7:30 Central, this is. On crude, then they put one on CL at 8 o'clock when it opens. That's, I'm sorry. Gold first at 7:30, and then CL or crude oil. 8 o'clock, and then then the ES, and sometimes the NASDAQ, but like the other day, the opening swing was like 48 ticks or something like that on the NASDAQ. So I haven't listened past then. But yeah, there you go. I guess this is all sounding okay and working right. It's amazing if, depending on how old you are, it's amazing what's happened with technology. I mean, everything that I have here except Bookmap and my trading screen stuff is free. OBS, all of that, it's just unbelievable. What a phenomenal time we live in and opportunity. It's amazing. Now I need to start looking for something here. We got at 8:45. I think there's a number at 9. Well, it's talking Feds and pending home sales. They're both 2-star events, but they are at 9 o'clock. So, because I'm trying to position myself for my risk neutral trading as opposed to scalping or something like that, I'm a little more, I try to be more discriminatory in trade selection. And here's that MCVPOC just down here. Pretty darn close, which just miraculously happens to be the resting, this naked volume point of control flag right here, which lines up with right over here. You'll see this was before the open. So this is the price, 72.5, where 72 quarter, I guess it is, where the POC was at the close of the RTH session yesterday. Ironically, right on the high volume node, right on the micro composite VPOC. What this flag indicates to me is it's a naked volume point of control, meaning it has not been traded or revisited in an RTH session. And this happens to represent the naked volume point of control from the most recent RTH auction. That's why I flag it over here, and it's the only one I do. And the old Ones from, sessions or days back, put on the micro composite. And that would have, well, we could be going down to that naked volume point of control and settlement too. I didn't get anywhere there, but I think I will stand aside until 9 o'clock just to see what happens. Well, yeah. So these are places where FOMO can really bite you in the butt. And where would these be get on spots, right? We're taking out levels right, left, and center across here. We've got them all now, except the upside. We've taken out the ETH low also. So Yeah. So a word about emotions, trading, all that stuff. It's important to understand that your brain wiring, your monkey mind, flight and fight, all those things are, built in from evolution. Never going to get rid of them. But what you really need to do is develop an awareness that they're kicking in and not react or not act upon them. This is a perfect example of a FOMO story. And, if you took any of these little pop tops up here and shorted, you'd feel all keen about yourself. And I need to do something about that. But I very definitely feel FOMO. For example, I have an error code in my journaling for breakouts, because for me, that's a sign of FOMO. I'm feeling FOMO when I take a breakout. Absolutely. Because I feel like I missed out on something. Or that it's going to go. It's all, it's, shiny. So, and I realize that that's a very valid trade philosophy and system for a lot of people. But for me, I've recognized in myself that when I'm looking at taking a breakout, I'm feeling FOMO. So I don't think that's the thing to reward. And that's probably one of the more dangerous aspects of breaking your rules, is when they work out in your favor, because now your brain says, oh, see, dummy, you don't need to worry about that. And that's dangerous, of course, because this is a business of statistics and probabilities over a large data set. And, your brain, our brains as humans, tend to only remember the positive rewards. I think I'm certainly not a shrink either, nor is this psychological advice alongside of financial, but you know what I mean? You get the point. And I would love, I'm standing here wondering, why am I talking and not shorting this thing? These kind of slow, grindy moves, one way or the other, are awfully hard for me to get involved in, especially so early on in the market, in a session, any session. Anybody that's listened to this stream for a while understands that I don't need any additional problem executing. And there's our 9 o'clock deal, which doesn't seem to have had much effect. Now, the speaker I'm not sure whether this is a current active speech or a rerun, or, you know what I mean, or just a reread or a representation of something he's already said. But it doesn't look to me like there's been a particularly good reaction, and there's quite a bit of sell volume going on here. Something that I used to have was the delta, and I wasn't ever sure whether that mattered or not, but I had a delta column over here, and look at this go down. Here goes that FOMO, you know. There's a big dose of that hitting your brain. And here we go past yesterday's close, and now we're headed down here now to this again into this gap area from back around in January, and this MC low. So the theory is on any of these kind of lows or these locations is there's a lot of fuel living down there. A lot of stops, right? And that's what the market does. Harking back to my discussion about zero-sum game and who's doing what to who. I think. This is my opinion, right? And I'm not a conspiracy theorist. This is absolutely, talk to anybody that knows anything about the market, and they're going to say, sure, that's what they do. That's what happens. That's how the markets move. If it wasn't a buyer and a seller and wanting to profit, the market wouldn't go anywhere. Just sit there. Because remember, the market only goes up or down. Time is something that we put on it to give ourselves some perspective. That's why market profile has got nothing to do with time. Now, even there, they couldn't get away from time in their minds, and they put the TPOs are 30-minute brackets, right? Oh, here we go. Here's that big micro. Here's that big migrating VPOC, which is a structured trade. I've talked about a million times. I would love to be able to figure out how to use it because it's so flippin' obvious, isn't it? But it's one of my worst statistics. It has the worst statistics, one of the, I think, second worst statistics of any of the setups that I'm trying to vet. Is this a sell? Is it going to come up here? Is it going to come back to mid and VWAP and test down? Is it going to go up here to a price check at aisle 3 like Tom talks about at TLab? You know, is this still too high? That's where the big question comes in, and I very, very, very seldom get it right. The obvious setup is plain as the nose on your face. It is the most obvious one. I guess second would be the IB highs or lows. But what do you do? So is this where we're going to test up and then we're going to head down? I don't understand the criteria or the trigger, and boy, I wish I did. Because it would be great. Try to get this in some semblance that makes sense to me here. Okay, there's $1. There's a handle per tick or per price level. So anywhere along here, if you shorted this going in the direction of VPOC migration, you're now stopped out because I use a 3-point stop, right? So, yeah. And maybe this is a good time to talk about trading as a business, approaching trading as a sustainable, serious business as opposed to video game or gambling or, just throwing darts or whatever else. And there's a couple things you got to get straight, or that I had to get my head around in the beginning, and that is that it is a random market. Talked about that earlier. The outcome, and is statistically proven that the outcome of the very next trade is 50-50. So to try to predict something is fool's game, right? You can anticipate something based on this or that or something else, but you're going to have a lot of disappointment trying to predict something. Anyway, so the secret to doing it, approaching it as a business in a random environment, is to identify a setup, like I've been talking about this VPOC migration as a real obvious one, and then identify the specific criteria that validates the entry of that setup, and then capture a statistically significant data set of that specific setup and criteria in some form of backtest or whatever, away from the live market. Once you have minimum of 50 examples and look back over as far a data, big a look back data-wise as you possibly can, you statistically, mathematically identify whether that setup and those criteria have a positive expectancy or not. And if they do, then you very rigidly, almost like a computer, follow. You don't really, I think you need to be real careful not to let discretion come into those rules, right? Because then you've broken them already, and they are a specific set of rules which identify that edge. So in the live market, you take every one of those setups and that criteria that presents itself. The theory is you rely on the law of large numbers to manifest the profit to your account. This is not my thinking. This is the thinking of the top hedge fund, most successful traders in the world over time. Jim Simmons, Ed Thorpe, Dalio, Paul Tudor Jones, Tom Sosnoff, Mark Douglas, Trader Tom, even Hogue talking, on a bunch of cowboys over at TopStep talking about it as a low probability trade. I mean, anybody that's a successful trader understands that that's what it is. And you take every one of those, you can't, a trade can't win if you don't take the trade or whatever, all those different sayings, but that is how you approach trading as a real long-term serious trading business. And if that sounds kind of familiar, it's the exact business model of a casino in the gaming industry. They only play games on the casino floor, which they have previously, before they started playing them in public, vetted that particular game, that criteria, that setup has a positive edge and specific rules. And then their mission on the casino floor is to play that game as many times in 24 hours as they can. And the edge manifests itself to their bank account. They know damn well that gamblers will win. We know that we'll take stops. We know there'll be strings of both because of random distribution. That's why risk management and account preservation is so important from a trader's point of view. That's not, really a relevant concern for a casino because they have extremely deep pockets. And the bigger your account is, then the less of an impact that has on your trading. But you still need to very definitely have risk management and account preservation at the foremost of your brain the whole time you're trading, no matter how big an account you have. And when a gambler wins, the pit boss doesn't run over and shoot the dealer or whatever else. They just go, hey, good luck, Screedle, you're a big winner or something like that. And then they deal the next hand. And they very specifically never change the rules. And that is truly what I believe to be the holy grail of trading. And it's the work. The work is put in the homework sessions, capturing the data, like I referred to earlier, wanting to back test data to vet trades and ended up down this frickin' rabbit hole with Python and all this other stuff because I can't find some place where I can do that. That's already got that figured out. Quant Connect seems like the closest, but you still have to be able to code up your strategy. So there you go. Anyway, so that is the holy grail of trading. Merry Christmas. There you are. And again, it's not just me. And if you don't believe me, anything you see about Jim Simmons at Renaissance Technology, anything listen to Tom Sosnoff anytime. He's online talking all the time on Tasty Lab or whatever they call it. He's always talking about occurrences. We're a think tank. Everything we do is based on data. I mean, quote, and on, So now, what are we doing here? Well, that VPOC migration trade south isn't working out so good for anybody, right? Okay, here's a classic example of what do you do. And how do you have, because it can't be different every time. It's got to be one particular setup and one set of criteria that either happens or it doesn't. And then another nice thing about vetting a trade that I always forget to mention, nothing is a surprise. You're busy waiting for, you understand that one of your setups, A setup, the setup is starting to set itself up, and it's completely, you're stalking the trade or whatever. I mean, I think that was Murad FT71. Murad Askar used to always say stalking a trade, whatever. That's what you're doing because you know that your setup is starting, all the pieces are falling into place about your setup and the criteria for it. So that's why this one is not a good setup for me because I can't figure it out. I would have probably thought that this exhaustion right here, we come up to 156, stops, we pull up here to 69. We can't get any more. I would have thought, well, that's probably a spot to short. And guess what? Not a pretty outcome. So I stay away from it because it's got the worst expectancy of any of the setups that I'm working to vet. And obviously, if you're good at coding and you have a backtesting system, you can vet them one at a time. That's the correct way to do it, and then roll it out in a live market. What I'm doing is, at this point, is going way back in time, and I run fast replay and trade out the trade. So I put on a trade with the risk neutral package and step back when the specific criteria and setup present themselves for whichever trade, rather than doing it one by one. If it's an IB continuation trade or an IB failure or whatever, in this case, we have a VWAP to VPOC setup. That may be maybe a valid idea, but at this point, looking at the way the day's trading, I wouldn't take it, and so that's where discretion comes in, and that's what you should not do. But I don't have it properly vetted to know what my expectancy would be. But there is a VWAP to VPOC trade, or a VWAP or mid VPOC trade set up in the Traders Lab and Static or whatever. That's how you do it. That's how to approach it as a business, I believe. And I'm not sure why this market is doing what it's doing. Another thing to be wary of here, hasn't really come to play yet, but we're only at 4,500 contracts down here at the VPOC, right? And here we are at 27. So another 1,700 contracts, and this POC is going to migrate up here. And then that changes the whole dynamic. So that's something to always be aware of. And that's why it's this setup and this configuration is, I find it comforting because it's not any kind of seat of the pants stuff. It's basically numbers, which more or less don't lie. When I first started, well, no, I shouldn't say that. I was going to say when I first started, I was traded off a dome, but that's not really the case. When I first started trading futures, I bought Bookmap way back in 12 or 2012 or something. But I'm dyslexic, so that big soup of numbers didn't do much for me. It was painful to try to use. So, big dip down, and now retrace back up here. I'm not really, I guess, just taking out these longs from yesterday. That would be my guess. Remember my ideas about how the market works? And they're not just my ideas. I'm just repeating or rephrasing what I understand from a lot of professional folks. One thing I will say is that I believe that in the intraday, like what we're trading, the time frames that we're trading, I don't think, as I said earlier before, I don't think the value of the S&P has got anything to do with anything. I think it's 100% strictly a speculation game. Now, maybe driven by longer-term, higher time frame people that have hear the bar talking and figure, oh well, there's going to be a better environment for trading or for the business or whatever. I wouldn't hazard a guess as to be how you would divide those or separate out those time frames and perspectives. But I don't know about anybody else, but I can assure you that for myself, I'm interested in whether this short I put on right up here is going in my way or not. And I could give a shit less if this S&P is trading at 71 or 61 or 91, as far as value of the S&P 500, because it changes so dramatically in a day. How can a group of investors or the overall outlook of the market be so volatile and have it be based on intrinsic value. Don't think that's the way it works. Well, anyway. So I guess the real disappointing part of the day is not figuring out a way to get on this big short, this big sell-off. And then you're all fat and happy and you don't really care. Back up to the value area high for today. Right smack dab back on the, now we just came across the micro composite VPOC again. Now we're to the upside of that. The levels are not moving. Obviously, the overnight mid is there. It's just that I had the statistic flag a little bit off center. Well, look at us go. Quite a rambunctious day here. Wow, look at that go. And I'll be sure to point out that these are 20 handle moves we're doing here. You know, this is 20 handles. That's significant profit. Now, depending on how you squint, I guess this could be considered a bar, which is a breakout and retest. But where do you draw it? Around this fractal? I don't know. So here you have a consolidation. Here or here. You have a breakout and a retest. I was always under the opinion that the breakout typically and retest, then you would tend to go in the direction of the breakout, which would have been pretty disappointing right there. Think of about 20 reasons why that wouldn't have been fun. And now what's this all about? Here we go again. So what we've done up here is we topped out. Did we exhaust? I guess kind of. But why? And that's kind of outer space. I don't know, you know. Mm. I was talking about the we had the VPOC migration up here that I was talking about earlier. The caution about by watching the volume over here from down here. And you know, and so many internet gurus or guys trading in the rearview mirror, you know, the RMT. They knew that this was, you know, they saw this exhaustion here at the VWAP and took the mid and out long and whatever else, you know, I mean. And if that's the truth and they're taking those trades, good for them. But interestingly, don't ever see any of them. Only one or two that I can think of that trade live on screen. And that's why this is important to me and why I'm not, you know, bullshitting. I mean, I've got a problem engaging for a while now, but I'm completely honest and transparent about it because remember that this is my virtual journal. So stupid is it to bullshit yourself? You know, that is just Jesus, delusional. In my opinion. That's something that you need to be real careful about depending on how you try to vet your trades. Be absolutely consistent with the rules. Otherwise, you don't have you're not comparing apples and apples. You don't have a statistically significant data set. You got a plastic bag full of garbage. You know? That's one of the reasons why I put the risk neutral 4-lot package. And when I'm doing that, I see a setup and then I put the trade on and just step back and let it play out. Scratch, win, whatever it is. Because if you're changing any of those any of those levels or those parameters or those targets around, that also is skewing the data set. As I understand it. And I'm pretty sure I understand it correctly. You know, if you bring your stop down or your target, you do trade management with your, with your runners, or for whatever reason, rather than going to stop, you bring your stop up to break even after a certain point. That's fine to do that if you have that defined in your trade plan and your trading rules, and you do that consistently on every one of them. Otherwise, you're skewing the results and you're just jerking yourself off, which I guess a lot of people enjoy. Well, and ironically, here's a VPOC migration in the opposite direction that's just now clobbered a bunch of people too. That they saw this VPOC migration, got all excited with this part right here, and then what's happened to them down here? All stopped out. So I'll be forever ever regretful that I haven't been able to figure that thing out until I do, but I've watched it enough months or so now that I'm not even close to figuring it out. As a statistically derived expectancy or edge. Because as I said earlier, the criteria. You can't miss the setup, that damn yellow line moving around. I suppose that's what's so frustrating. back to doing my, I had a well-established habit, out of breath. Every hour I do an exercise, like, 15 pull-ups just now, and some weights. I have some dumbbells in here. Anything just right here in the office. I got away from it, and that's really stupid, A. And B, from a health point of view, and also it's from a mental acuity and focus point of view. Well, there would be a real good spot for the VPOC mid, VWAP mid trade, and it worked out well, right? It didn't here. Well, here it did. That's the problem, isn't it? And what's the difference? And this is 10 handles. I mean, I'm not sneezing at it. This is 10 handles across here. So that's a excellent trade. I mean, excellent return. But I don't know. I sometimes wonder that if I wind in or out of this thing, I mean, you can get this out to ridiculous, or there's 10 seconds. And maybe that's, I just don't think you need to be in that close. I don't think that I can do this successfully in that close. Let's put it that way. So what do you got here? You got 68 out here. Nothing recorded there. I'm looking for exhaustion or something. In other words, what would be the criteria and the trigger for this trade to take advantage of these 10 points? The setup is, I got it. It's VWAP and mid to the VPOC. Well, there you go. There's a little dipsy doodle here now. Rod got short over here and got scaled. And now has got his butt grabbing the chair and has had like 2 or 3 stops and a couple of 3 scratches today. I'm not sure that's the right way to, seems like overtrading to me. But, you know, very successful and consistently profitable. So I'm not one to talk. Certainly not one to talk about that. Kind of hard to take this VPOC migration seriously when it's doing this crap. Is that what's going to happen here? Boop, we're going to go back up here. I mean, here it migrates down. We test up here to what appears to be an exhaustion. Trade back down through it. Everybody's excited. Now, if you were up here somewhere, 77-ish, you're scaled. So once you've got that risk neutral scale off, you know, sit back and put your feet up. Basically. Can't really describe. Oops, busy talking to a muted mic. Well, what I was just saying, I'm not sure where I muted off or on, was how do you look at this? How would you take the VPOC migration seriously with this kind of thing going on? essentially here we go to a form of exhaustion, tested down through, didn't get any heat, and now we're actually making some headway. The important part is that you got scaled right here. And I can't, it's a huge psychological plus for me to follow this risk neutral concept, because it's a big psychological difference the minute that scales off. Sit back, put your feet up, and, then you worry about, start thinking about managing the trade. As, for example, if you're in up here, your stop is up here. Okay, we've traded down through here, and what have we got? We've got 6, 7 points. Well, you might think about bringing your stop to break even. Entry, break even, maybe the first scale. A lot of people do it different ways. Trail behind the swing points. Here's a swing high, here's a swing point after the trade, so you'd bring it to here. That would be essentially to entry. Now we're getting a migration lower, so you could think about that, bring it here, and, there's a lot of different ways to manage the trade, but after your risk neutral scale is off, has been hit, then it's a pleasure. So Rod, who I think I mentioned, it took a short run up here. It's taken no heat, and now it's working out his way, but he was down two or three hit stops and a couple of 3 scratches. So this is going to make him whole if he keeps running, and that's great. He's a hell of a nice guy. He's the guy that's from Trader's Lab, a coder, good trader, nice person, that's developing Static, which is a application that I've been fortunate enough to be invited to, the beta stuff of, it's like kind of a journal on steroids at the moment, and the idea will be that it'll be back testing and statistics moving forward. He's coding it all up, it's a great idea. And it's not for public. That's why there's no link in the description here. Static, S-T-A-T-T-I-C, one word. At some point, it'll be something to remember. Nice people there, too. I tend to stay in that Discord more now because it's quieter and more focused. And whenever anybody takes a trade that's... they post a snap of it with, with Bookmap, when you take a snap of something, like right here, this is one I did from the other day. You have the break-even line, you have your entry, you have your different, all your different orders and stops also. So it's real easy to understand what they were thinking, and it's, again, transparency and accountability, which I think is ultimately important. The next thing to this is, why my mouse quit working, I don't know. The next thing to these kind of snaps is live screen share, like I'm doing here now. Well, it's working out very nice for him. That's great. And, in the rearview mirror, it'll be real obvious to everybody. Oh, I knocked my mouse on the floor here. That wouldn't be a good thing. So essentially then, he shorted right here. And is, well, let's see, where is he? 82. So he's 20 handles in the money. That's great. And so now what do you do, right? Do you take this VPOC migration lower, test back up to these things, and look for another short down? I'm going to sneeze, I think. I guess I should have. One lot. Now that is exhaustion. And you would be scaled. So just messing around this, keep bobbing in and out of this gap from way back over here on the 15th of January. Which is, oh shit, I was on the wrong screen all this time. I'm sorry about that. I meant to be over here. The football. Well, I don't know how long I've been doing that, but I apologize. Oh, I can show. I guess not too long. Anyway, so what I was going to say was, this gap right here from the 15th and the 14th, we keep fussing around inside of here, and we're down here. Well, we were down here earlier this morning. And this here was our MCVPOC from this micro composite. So we keep bobbing in and out of that. Here's the MCVPOC, and here's that top of that gap from the 15th. The close, which they have not been successful at yet, is right somewhere there. Break this thing, and I don't want to do it with a 4-lot. I don't think that's very intelligent. I've considered micros, but I think what I will do now here is jump to a 2-lot, confirm that that's been accepted over here, and there it has, and there I'm on the dome, so that part's all normal. So the next trade I could put on here would be a 2-lot. Now that has a little different implications than the 4-lot because there's only 2 contracts, right? The first one is risk neutral scale, and then the second runner is, or the runner is 48 ticks. And so that particular trade, at least in my opinion, needs to be managed much more closely than the 4-lot. In terms of locking in, once it goes your way, start trailing that stop up to lock in profit at various levels. That's Hello there. Now here was another VTOP opportunity like Rod took advantage of right up here too. This Globex VWAP. And I'm not saying that any of these are, this has got a lot of crap going on right here, a lot of obstacles in the way for continuation. But once that scales off, that's what counts. Well, some pretty volatile action here. I may be wrong here, but let me just see something. Far about a 70 handle range. Could that be right? Yeah. Our low is at 31.5 and our highs up here at our lows at 59.31.5 and our swing high, our RB high is sitting at 6,007 quarter. That doesn't make sense. My IRT is saying we've got a high of 60.14 and a 31.5. So do we have some room up here somewhere? Oh, this is looking at the ETH high at 14.5. Okay, so I was, as far as the RTH period, I was right. That threw me off for a minute, but okay, I'll accept that. Well, and there's Rod stopped out. There's no question in my mind that he did not hold that. He's taken his scale and a couple of profit targets out. But, if you were just sitting on it, there you are. So we fast approached the end of the RTH1, which is a way we've broken up the day. There's 405 minutes in the RTH session. So RTH1 is so you divide that by 3, you get 135 minutes, right? RTH session ends at 10:45. RTH2 ends at 1, and then we go smoking into the close at 1600. Actually, 15:15, but that's the cash close. Any of these kind of, when you've got the scale like this, any of these kinds of movements are great, but that's not really what is that? Is that in outer space, kind of? And when you look at it over here, it's just a one wrinkle bar, right? And there's where we tested our developing value area high. Rods get on V spike right here. Just looking at the YouTube on my other machine over here, it's pretty damn near close. Maybe 5 or 10 seconds off. Still not, still could be disastrous if you were trying to, like right now the stream is ticking up past 84, and on the real chart, it's on my regular machine, it's pulled back to 82. Now 81. So, yeah, it's, I got to figure that out if I can. I guess the way, I don't know about this. I don't know if Discord, if there's a delay on a Discord screen share or not. Would be, I don't think there is, but something to look into maybe. The problem with Discord is I don't know if I can go from YouTube to Discord. From OBS to Discord, and that's where all of the time chapters and configuration is happening. So I think it's probably something to think about down the road, I guess, maybe. And again, not to overemphasize the obvious, but this is 10 handles here that now we're down around 15. This is a 15-point move. That's phenomenal. I mean, that's phenomenally good risk reward and every other kind of thing. And it's if you just hit it up here, not that it's really a level to hit into for some reason, the asymmetric trade is ideal. You can put your stop one tick above there, and that's what I don't do with the risk neutral package because that screws that all up. But on the other hand, the asymmetric trade location is a real valid way to approach it. What's your risk to reward? You got 3 ticks up here or something, a point, and there's your reward, 15 handles. Even if you get here, that's still 6 with no heat. Now, I don't see no, not really. If you wind it out far enough, you could say, okay, we tested up here above this, the mid, and then this is the overnight mid, don't forget. Kind of an outside in situation, which is a mean reversion, and that's that's one of my best setups. And I don't seem to be looking for that lately today, and I don't know why. For me, the outside would be up here, not necessarily here. But it is in fact a mean reversion, right? Mean is right here. And this is clearly not anywhere to engage, but it's a lovely mean reversion. The 11th commandment here. And we are just about ready to wind up the RTH 1. In my opinion, the trade quality deteriorates with each of those. And this just could be my perception completely. Well, Well, yeah, I can safely say I don't know what to do. Again with this, gap. I don't know, and the low of the MC. I have no idea. It is a fact that, I guess it's a fact, it's a widely understood wives' tale anyway, that the market pretty much always returns to repair things like gaps. And it's been my experience that that's the truth. I guess it's important to point out here that talk about the initial balance statistic. Kind of late, but remember that the IB sets, and the initial balance statistic sets at 9:30. Well, that statistic goes like this. There's an over 97% chance that the high or low of the first 1 hour, which is the IB high and low, is exceeded by price in the balance of the RTH trading session for that day. And that's statistically proven, goes back forever, is on my study, everywhere else. Over 97% in all 4 open types. So, what does that mean exactly? Hold on. If you think about that for a minute, that means that if neither IB high or low are taken out, there is a 3-point change probability of that. Pretty unlikely. Okay, there's about a 35% probability that both IB high and low are taken out. But right now we're in a situation where neither IB high or low have been taken out or close. I don't think. Let me just be absolutely sure of that. Yeah, absolutely not. They haven't even gotten close to either one of them. And the probability of neither being taken out in this balance of this RTH session is about 3.3%. Because there's a 97.7%, I believe it is, without looking, probability that one or the other will be taken out. So that's something to think about. That's pretty amazing. Well, just looking at it too, this looks like if ever a day had a chance of not taking one or the other out, this would be it, because it's a wide range. They're both right at obviously at the high or low of that range, and we're just flopping around in the middle here. So, you know. And watch this, no sooner than I say that, they'll go zooming down and take that out. Oh, yeah. Magic. Now, conventional wisdom is that when you have a directional move, in this case down, you get on the pullbacks. And that would have been a get on. And you'd be well scaled and maybe not get any further, but, at least you'd be positioned and in a trade rather than I don't know what, a sheep. Another way to look at this is higher lows. Oh, we're going to come back the other way. Whereas here we had lower lows. It's just, there's a marketism for everything, I think. In this case, basically, it is you don't want to try to justify FOMO or breakout. But having said that, when there's a directional move and you're not on it from the beginning, how the hell do you get there? How do you get that way? And the conventional thing is pullbacks or, buy the dips in the case of an up move. That's a real old, very old saying. Now, what happened here? We had, it's funny that they don't show the out. And this is the part where, you get so frustrated and fed up and I guess to a degree FOMO'd. It's like, damn, I just want to put a trade on just to get break the seal. And then it goes, then you look at short at the bottom or something stupid like that. That's something that as the day wears on, the more aware of that I become. And I hope I'm not just rationalizing and making excuses, but the rod has got to be just doing phenomenal on that trade. Oh, wait a minute. Did he stop out? Oh, he got clobbered. Yeah, he would have been taken out right here substantially. Here was his entry. But he's, scaled and a whole bunch of stuff down to here, 60 from 81's 20 handles. So, nice trade. Sorry, looking at the wrong screen there, I think. What I was saying was, looking at that short rod was on. There was his V entry. Down to here and up to there, stopped at that point. I don't know if I had the wrong screen up or not. That's why I did that again. I'm very definitely aware of not FOMOing into a short down here somewhere. And we're in IB RIT. Jesus Christ. RTH2. God, I better get to bed quick before I hurt myself here. I can't even talk. Oof. As we test up to the developing value area low here, that would have been a good idea for a short, I think, for a good pullback location to get on. And, you know, not that it may not go anywhere, but it would be scaled. And so, and again, that's really all that matters in the long run, because the worst you can do is scratch. And in the case of a 2-lot, you don't have any other option. Oh, yeah, I guess you do. You can always bring that runner up to break even. And there we are. There's 4 points from these levels right here. This little bar here. If you call that a bar, that's a breakout and retest. Boom. At a level. So that would have been, that's a trade I should have been anticipating. That's my fault. As is everything. The only person you can blame in trading is you. Or, yeah, you, actually. Disappointing. Well, there you go. That bar breakout was a good one. That developing value area low. Now we're down 10 handles. Pretty volatile here. Previous micro, you see the benefit of these flags. I can tell that we were here earlier on in the day, a long time ago from the looks of it right there. I'll step away for some food and shower and whatnot. step away and they break it. Look at that thing. And we were just talking about this low right here at the previous, the test with the previous BPOC, and boop. What a beautiful mean reversion. Huh? Wow. Well, it looks like that test of the is still a pretty viable test right here, I think. I'm down here at this naked volume point of control again. That's got that 350 contracts living down there. That must be a strike. It must be a strike protection, I guess, or strike defense.
Order submitted. Order submitted.
All right, there we are at 2 lot, and we are risk neutral. And targeting this IB low. We'll see. At least I got off dead center and took a trade. That's kind of cool. I'm looking at the statistic involved here with 3.3% probability that we will not take out that IB low.
Order submitted.
And we'll see what happens here. What the hell happened? How could that possibly happen? How could I possibly have this out. I must have accidentally bumped it and hit the X here, which wiped that trade out. So I'm going to have to monitor this extremely closely now and use my mouse button to take that profit, which I'm going to do right now.
Order submitted.
So there we are. Wow, that was pretty much a big blunder. Yeah. When I moved this stop, I must have accidentally clicked the X, and this is order cancels order, right? So now I've only, well, 750 bucks is a pretty good return on the 2 lot, I guess. Wow, that was quite a surprise. That's fortunately I didn't. Fortunately, I figured that out. Wow, that's pretty incredible, man. I got to get a different mouse, maybe. This mouse is a Logitech fancy dancy thing, and the buttons curl over the front. When I bump it into the mixer, sometimes, for example, I just bumped it into the mixer and it did the screenshot. And now I could be making a lot more money here, but I don't want to be, I wouldn't mind being greedy, but on the other hand, I had no trailing stop. My entire intention was to keep trailing this up, moving this target out and trailing it up. But when I hit this, I must have hit this X. I'll be really excited to go back and look at the replay. That's a really beautiful part about Bookmap and about this stream. But now look at this. I could have doubled my money. Son of a bitch. Wow. I could have doubled my money here. Or more. Well, that's what happens. But hey, I'm, perfectly okay with that. I'm not perfectly okay. I'd rather have this be 1,500 rather than 750, but that's another, incidentally, this is another 10 handles across here. No, I'm not hungry at all. I thought you were making a joke. Well, that's just pretty darn disappointing there, I'll tell you. That's pretty darn disappointing, but I guess I'm not unhappy, obviously. Well, I'll be real excited to look back at the replay here on the stream. This will be this stream will stay live, of course, because there's a trade on it. yeah, so that's pretty amazing. And actually, I might have been able to squeeze some more out of that had I not. I'm assuming that I know why this happened. And I'm glad that I was, aware enough to react quickly. I'm assuming that had I not done that, I would have moved this target out. And as a matter of fact, that's what drew my attention to it, was when I wanted to move trail this, or keep moving this stop away, or this target away, and trail up. I would have moved this down somewhere down here and brought the trail down to here, which turns out, I'm not complaining. It's just, just always something exciting in trading. And so long since I put a trade on it, only got that over with, I feel a lot better. I forgot the process. Anyway, I always do a recap after. And so this was a bar trade, which is a consolidation, breakout, retest, basically. Obviously below these levels as well. And I knew that there was a 3.3% probability that we would not take out either the IB high or the IB low. And so I took this bar breakout targeting this IB low and point south. Got my risk neutral scale here. And apparently, I'll be looking forward to the replay. I must have, when I was moving the stop up to break even, I must have hit the X, which canceled the stop. And because this is OCOs, one cancels the other. When you cancel this or delete that one, it automatically deletes the target. I noticed that when I went to move the target down in preparation for trailing the stop up, for trade management with the 2-lot. That's about all I know how to do is move it, is to do it that way. And then I realized, took me a minute to realize exactly what the hell had happened. I opened the trade control panel to make sure I was still in a trade, and I was. And so I waited a minute or two here and just keyboarded out, because on my keyboard setup, I have cancel and close all, or flatten, or whatever you call it. I have hotkeys for those, as well as all the different market, hit the bid, lift the offer, hit the bid, limit, all that stuff in my keyboard setup. So I was able to just quickly do that because I don't trade with my mouse any more than, I would have hesitated adding a resting order somewhere around here. And with the one thing about the multi-brackets, if you do that and it fires, you're going to get the resultant target and stop, which you don't want to have happen, right? So that I just keyboarded out right here a little bit, kind of in retrospect, unfortunate, but because I could have gotten down into here and would have. But hey, I'm perfectly happy with, 60 ticks on a 2-lot. So there we are. And I've been thinking, whether I need to just, like in practice, get up to speed with how to really use the damn mouse. I think most people use the mouse. But where I get screwed up is right and left click, right? Like, for example, I don't know how to enter a stop loss that doesn't have access, that wouldn't automatically trigger the multi-bracket with the mouse. So, and maybe you can't. Maybe once multi-brackets are on, you cannot do that. I don't know. And there's no quick way to turn them off. Oh, I guess there is. I guess, yeah, I guess you could turn off the dome here and then just use a keyboard for, a market or I don't know how that would work. That would be interesting. Because in order to shut off multi-brackets, you got to go over here and go down there and do all this kind of click and poke and stuff. So I don't know. But that's not very handy. My shortcuts. These are my shortcuts. All done with my number pad. And, but going between Control and Alt. Cancel all is Alt 0 and flatten is Alt period. And if you look at your number pad on the side of your keyboard, which I'm assuming you have a 10-key number pad. I do on all of mine. They're just in order, right? 0, 1, 4, 7. Up the scale you go, and period 3, 6, 9. So that's how that works. And I won't be trying any more trades this morning. Here we are in the power hour now. And they're going to take her down some more. Without me. Oh, they finally got that gap low. They've been monkeying around with that damn thing forever. Finally got her closed. That's this gap right here. There's the gap low, and there's the gap high. They've just now closed it. And they're still on the bottom, looking for lower. Next stop down would be this micro composite VPOC at 62.25. Well, in theory, in theory, you would still be in this trade and just letting it run. That would have been great. Definitely would have had another mindset about doing letting the winners run had I not had this execution drama over here. I would have probably, my initial thinking would have been to move this target down to the gap close and trail up. Trail to here, see how these, market reacts across here. Basically, the only way I know to do it is just trail up a little above the last swing highs. That's about it, I guess. And then who knows what you do over here. I guess what you would do is when you started coming down here like you were going to take it out, move that away and bring the trailer down over the top of it in here someplace. The stop trailing up, I guess that would. It's pretty tough to do that with with just a two lot because you've only got a stop and a target. One stop and one target to manipulate after you've had the risk neutral scale. So. Would have been another 30 handles. Wow. That's pretty amazing. an interesting observation here about the difference between the 2-lot risk neutral package and the 4-lot. In the 4-lot risk neutral package, the third take profit is at the same exact location, 48 ticks. But in the middle, there's 24 ticks, and it's double the lots, right? So if I would have let the trade go without any trade management to the target, to T3 on a 4-lot right here, that's 96 ticks. Now, as it turns out, I got 60, so good for me. But it's 96 ticks. So I'm going to have to think about that. It doesn't sound like there's a big enough tick difference to do with the risk. It's double the risk. There should be double the reward there. That's something I'll have to think about. That's a homework thought there. I hope that I was just not talking to a muted mic here. Jesus. I'll try this one more time. I hope I'm not talking to a muted mic. But quickly, what I'm looking at is assessing the difference between, this is the same 48 tick target on the 2-lot as is on the 4-lot, risk neutral 4-lot package. The difference is this is $750, and on the 4-lot to target is $1,200. Well, that's only 1.5 times additional profit for double the risk. So that's not good. That's cutting the risk reward ratio down substantially on the 4 lot. Now, I hope I got that all with the chapters and the speech and the mic unmuted and whatever else. What happens when I get to thinking about something or focus on something, that you can understand what a mess it would be for me to be trying to type and screen grab and stuff to keep up a journal. That's why I'm doing the stream. Well, they're taking her down, huh? Maybe this economy doesn't think so much of tariffs and other shenanigans that Dick and Tater have gotten up to here. I saw somebody make a cartoon like that. It was really funny. I don't seem to hear my voice properly here. I don't know whether it's me trailing off or whether some settings clipping. I don't know. I'm speaking again now so I can, with my headset on, so I can monitor it. Maybe I'm just too close to the mic. That's a possibility. Move this thing down and off a little bit and see what that sounds like. I think you're supposed to have a fist or something like that to these Shure. This is Shure SM7B. I forget. Yeah, so hopefully that broke the ice. That wasn't a very positive statement. I meant to say that broke the ice and I'm back in the game. That's great. how you talk to yourself is your subconscious mind listens to what you say. If you continually berate yourself or whatever else, your subconscious mind says, okay, he's a dumb shit or whatever, you know. I am speaking of dumb shit. Yeah, there's my exit, and here we are now. Wow, almost 30 handles. That's pretty. 30 additional handles times 4 is 120 ticks. That would have been it. Right now, I'd be sitting on a total of 180 ticks. These are those opportunities where make your day, make your week, make your year, you know, let your winners run. $14.20 on someday. What the hell is this? Thursday, I guess, right? Yeah. Is it Thursday? Yep. Oof. Took me a minute there to remember what day of the week it was. That's probably not good. It's actually all a big soup to me. I work. First of all, I stand here every day. I stand up desk, no chair in the office. Actually, I start at 6 in the morning, and I'm still here doing homework and stuff at 9:30, 10. And weekends, days, weeks don't matter. No difference to me. All right, so this is interesting to watch. One nice thing about the futures market might be so for others is that there's a continual stream of opportunities. All right, so now we'll see how we wind up today. I would say I don't mean myself personally, I mean the market. They're still pretty excited to be down here on the lows. There's no big numbers coming. I mean, earnings out tonight. It's Dell and HP and a few others like that. Not anything like last night. Sellers are definitely having their way with it. And I can't imagine that, well, actually, there could be. I was going to say I can't imagine there's any longs left in it, but there could be, actually, if you look over here. You know, there's a little noise down here at the bottom. And what do we have over here? We've still got some other stuff behind us. I don't know. I'm not sure how much I subscribe to that, all those philosophies, but they are definitely tickled to death to be going south, that's for sure, for whatever reason. One would imagine, well, I don't know. I was going to say one would imagine that it's long liquidations rather than new positions. What you need to do is look for any increase in open interest, which I don't. I track open interest, but I don't have previous, and I'm kind of a dummy when it comes to not paying attention. For example, our open interest right now is 2.08 million. So it will be interesting to see what that is after the close and the next. I don't even know how often they update. They update the number every day, absolutely. But I'm not sure if it's like on the market. MOC orders around 1450 or after the close. I'm assuming it's after the close, probably on the RTH Open. So I need to either create a calculated field for that or just, start paying attention and focusing on it and know where I am. Situational awareness. So we're moving into the close of the cash, which is at 1500. There's actually the curb trade with 1515, quarter after, but I call it at 3:00 because I have to go to school run. I don't have to. I look forward to it, actually. We got the MOC release at 1450. Now, if you wanted to really see something breathtaking, put on a short squeeze and take it back up to the POC or something on the closing swing trade. That'd be pretty phenomenal. 70 handles. Realize this is 70 handles across here. Oh no, yeah. Well, it went up a little bit, but yeah. 60. Whoops. Yeah, the POC's at 70, right? 70 handle. And we're trading right on the actually 72. We're actually below them. That's pretty amazing. One hell of a day. This crap here, these brown gold bars, are to do with this noise down here. And it says that it's because I'm scrolling around so much and there's a lot of volume coming through, it's aggregating. And that's what these bars stand for. There's 5 ticks, 5 points, excuse me. I'm just trying to get this thing to 1 point in the price ladder. It's irritating. You can't just set that, to me. There we go. Well, that's a lot of scrolling around just to get one price increments, $1, 1 point increments on the price scale. There ought to be a way to just set that, and then that's that. And there certainly is there's about 50 different ways you can do it on IRT and other software that I'm familiar with. So anyway, 35, look alive, here we go, 14:35. 25 minutes to the top of the hour. And what a day. Oof. There's the trade. There's our open. And there we are now. Oh, there we are now, and there we were. And I'll look at the bigger picture here because I'm not thinking about putting on a trade at this moment. Or I would not do that under the circumstances. There's that MOC release. One of these days, if I ever get straightened out with being able to do this quickly and efficiently with a back testing, Python or something, I'd be interested to know if there's any kind of an edge around that number. You know, just short term, like scalp trade or something like that. Because it's pretty much every day. The witching hour approacheth. Well, let's see now. They're going to just keep slopping it around and taking it down lower and lower and lower. 5 minutes. There's oftentimes another MOC pop at 55. I'm not sure if it's two separate releases from different, I don't know, CME and CBOT, or I don't know. Man, they continue to go here. I'd have been been pretty tall cotton if I'd been staying on this thing. That's pretty astounding. 3,000, 3,200 buyers down there in an iceberg. Buy iceberg. That's what this means, or is. Another 172 close out here. Here we come towards that. This is an MC low. That's actually from a long time ago. The 2nd of January. I used to be real, the low and the high of the micro composite and all that stuff, looking for the stops under there. I've kind of let that fall away, and that's probably not a good thing. That's probably a good, important thing to do. But I'm not sure where that level comes from. Well, it's accurate, all right. It's this micro composite right here, but it's hardly relevant because we've already taken it out over here. So that's a mistake on my part, actually. Or, just not a case of not taking off a stale flag. And here we are. The liquidity's filling in and around. Wow, that is one hell of a sell-off. One hell of a sell-off. And I am getting ready for the school run in about 15 seconds here, I think, or something. And there we go. All right, so I am going to get myself organized here and skedaddle over to pick up Tam. This stream will remain public. The other streams I have discovered, if I put them as unlisted, as long as if you've saved it and have the link to it or whatever, you can go there, no problem. I just thought it was silly to leave them up public when, I didn't figure anybody that would be interested in them without trades on them. But if there's some reason that somebody wanted to, I figured out, I just learned how that works that way. So going forward and from the last 5 or 6 back, they'll be unlisted. So, meaning that they're not private, they can still be reached by a link. And I assume that means if they were saved for later, which is what I do. Okay, there we go. Have a great day. Back at 0800 in the morning.